TGIF, everybody. How's everyone doing?
Morning, Dale. It's Friday.
Hey, yeah, how are you, Ryan?
All good, mate. Sun's out.
Morning, morning.
Everything's great.
Sun's out, guns out. Time to hit the beach.
And it's Friday, and you know.
Wait, hold on, Dale. Did Ryan just say sun's out, guns out?
Yes, the one day.
Is that a Marine terminology?
No. That is for a pale person in the UK that has not seen sun for like what, 6 months?
Or exercised in like 12 years.
Or exercise. You're going to scare the hell out of people on the beach, Ryan. I mean, come on. People bring their families for crying out loud to the beach.
I go from white to pink in 20 minutes.
Your stand-up is getting better and better, Blake.
I bet. All right. I'll shut up now. All right.
It really is.
Morning, guys.
Anyway, so Ryan and Stella are here, and Blake's here. Kman is here. So first down day in yen, guys. Before I get to that, earlier in the week, I thought we could get to 1970, some type of little ABC that's done in gold. And yen finally broke the momentum. I know what Ryan did. Ryan looked at the 15-minute chart, and once he saw this, and then it failed. So you have a shot on those options now, bro.
Yeah, definitely a bit offside still. I don't think we're out of the woods. We had to reverse overnight. We had comments from Kuroda and from one of the other government bods saying that they're watching carefully, and FX needs to be watched for financial stability and all that palaver. So the jaw boning has started. That helped it lower. Obviously, the day before we had one of them coming out saying they're not fussed about a weaker yen. So one day one says one thing, another day they say the other. So it's put a little bit of a halt to proceedings, but it bounced strongly back from that down near 121.
20,
got all the way back to 122, and the big figures solidified again there. So, like you say, from a 15-minute chart from the close point of view, potential signs of a stop. If we see 122 tested and held again today, then you're going to start thinking about you've got a stronger top in play.
I don't know if everyone heard about the recent ban, but Russia has suspended weed sales. Did you guys
sales
know that?
or fertilizer sales? You mean your COVID meds?
As long as they don't suspend
weed sales.
That's why you're panicking.
Weed sales. Anyway, I think I've shown a few of these every once in a while because, I just like to look at the stocks. But there's been, yesterday's kind of a breakout day. There's Tilray. I don't know why I follow them. Do you?
That's because you put it all hidden under your mattress.
It's a hedge. Anyway, so.
Do you mean a hedge is in a hedgerow?
It's a hedge for me for losing my mind as a trader. Someone said to me, "Oh, Dale, you're a legend," because I've been around a long time. I said, "Well, I don't know about that. Maybe I'm a masochist." What do you think, guys?
You've got to be a bit mental in this game, haven't you?
So dollar indecisive still. EG made some progress here, Ryan, this week a little bit. Came off now. I don't know. Yeah,
it's a little bit in limbo at the moment. I'll put that in the chat room. We had the support off of 83, but we can't get above that 84.20 level and hold it. So in the bigger trend, it's still very, very bearish, and that it doesn't even start to look unbearish until we get above sort of 85, 86. So lots to happen.
And the dollar index almost says, it's a range trade. It's still a range trade. I would prefer to see the range taken out to the upside and complete. Like, this could be a triangle, and sometimes the final thrust comes out of here. It's like a terminal wave or a breakdown. Do something here.
The question is, though, what would bring another thrust higher to the dollar? I mean, how much more can the market price in terms of the Fed? Either that
I could think of one thing.
What's that?
And when Pippa shows up, it could be that everyone's getting a little bit sanguine with what's happening in Ukraine, and oil shows it. I mean, oil came off right.
Yeah.
Blake showed the 61.8 up here. So I think one thing that could do it would be escalation by the Russians. Some people think that they're just in defensive positions. I read that they're pulling out troops from their peacekeeping duties, and Russia's big. There's plenty of these huge areas that they have to dominate with troops, and they're pulling them out. They're not there. So anyway, maybe they're bringing them to Ukraine, and they're going to try some type of assault again.
I think you're absolutely right, Dale. Any kind of escalation or crisis, the dollar gets an instant lift. That's the knee-jerk reaction. The question is, though, how far and what do you do with that? I think if that happens, that will be the best chance to sell dollars in quite a while. So,
amen. That's why I'd love to see it. So, yeah, I agree with you, Stel. And at least the EG is, held to 61.8, There, I was looking at this EG, this box right here. It's about 100 pips between these two fibs. And if you take the measurement from it, it actually measures, around 82.60, which is 78.6 back. So, I mean, I think if they really do crush euro, and I still don't think we're going to make new lows. I don't think euro pound makes a new low. I bought some at 61.8, and I'll buy some more down here. So
yeah, I'll be adding down there if we get down there.
And just one last thing, S&P is getting real close to this very important line. Oh, why am I selling camera? All right. So, it went all the way back to the highs that we had here in September. And then we broke out and traded underneath it, tagged it, broke down, rallied to it. This was, couldn't close above it. It's really a nice pivot line, and it's also 61.8. So,
you know what I'm not liking about this level, and we've had eyes on it for a while now. It keeps grinding there. Do you know what I mean? It's not spiked up to the level and pulled back. It feels like it's building a bit of momentum. Do you know what I mean? And if it goes, then we could be 46s pretty quickly. So if people are looking to short it, feel free, go ahead. A level's a level until it's not. But just on the price action, I'd be a little bit cautious, and I wouldn't give it too much room if it does break.
Yeah. I mean, the fangs have all come back. Apple leading it, but most of I think people are parking money in fangs again. So the strength, and this is the biggest stock in the market, right? Market cap wise. So look what it did down here on the daily. Classic. Everyone was very worried about the market right here, and it gapped the 200-day. So I heard people on CNBC that day talking 38, and it was reasonable, but it held right where it had to, shook everyone out, and we're not that far away from new highs. So goes Apple, so goes the market, but if this is ever in trouble, then it's over. Really, the market's going to have a hard time if Apple's acting like everyone's parking money there. Compared to Netflix, broken stock, Microsoft, not as bad, but it hasn't even rallied halfway back. Amazon had a great rally, and this could be another thing that could drag the market higher. If Amazon gets above here, that would project new highs. Tesla's acting okay. Facebook's a broken stock, and Google look not that far away from making a new high, acting good.
Yeah.
So
I think one of the people I follow on Twitter who I really respect was writing today that everybody seems to be bearish stocks, and it's not just FinTwit. Everybody I speak to said is bearish stocks, and I think in the short term, he's right. And look, I've always said that when yields start rising, my bias is going to change. for stocks, and I have turned bearish, but I wouldn't get ahead of it right now. And I've said this for a few days now, right?
You said 4,600.
Yeah, 4,550 to 4,600, I think is probably a nice level. Again, nobody knows, right? I mean, it could go straight through, but I think that's a nice risk reward because you know where your stop is. You know, you have those highs near 4,600. You place your stops a little bit higher, and it looks like a nice probability trade, and that's the best you can do, right? You can maximize your probability of success. Nobody knows what's going to happen, but it's a bit like poker. You know, if you know your chances, or you can kind of try and calculate them, if you consistently put on trades that have a good risk reward, you only have to be 50-50 right? And you're going to do well. So patience is a virtue, and it's been really difficult in these markets recently. But I think my bias is to be short equities, but I'm not shorting anything yet. You know, I want to see those levels. And I do think another thing is that for the past weeks, we've had Fridays have been usually a kind of risk aversion because you don't know what's going to happen on the weekend with Ukraine and all that. Right. Things they're now seeming not to be over. Obviously, nothing's over, but it's a bit more quiet, and it looks like the Ukraine are kind of digging in, and they're trying to control their positions and all that. So it's not like it used to be weeks ago or last week or the week before, where it was like, okay, tomorrow might be, the day when Kiev falls, So I think the market's a little bit more calm, let's say, in that respect. And that's why I think we may not see the usual Friday risk of, don't want to hold anything in front of the weekend trade. So that's why I think... Yep.
Oh, go ahead.
I was just going to say, that's why I think that we're probably going to squeeze into the weekend today.
You don't follow me on Twitter, do you?
Why did you say the exact opposite?
You don't. Obviously, you don't have any respect for anything that I do, nor do you follow me on Twitter.
Who's this guy still?
I mean, you just completely derailed everything I was going on this morning about. Stelios.
That's what makes a market, isn't it?
No, I actually tweeted something that you were talking about levels. Do you know? Let me just. Dale, do you mind if I take over here?
No.
Why are you taking over? Can I just add something on the
no
individual stocks?
No, Kman. I'm not done. I'm not finished. I have something to say.
It's Greek Independence Day today, so I haven't been on the screens all day
long.
So
apparently, you were independent thinking today. What you're thinking.
Another bank holiday in Greece. I don't know.
Another holiday in Greece. Imagine that. No, I just want to show you something. And then Kman, Leo, I'd love to hear your comments.
That's kind of weird coming from
we've had this set up on our charts for a long time. You guys, we've been here before. You've seen it before, whether you're talking about the S&P, whether you're talking about the spiders, this has all been drawn out the exact same way. And let's actually go over to the daily chart just so you can see. I mean, all I want to show you is we're at the 618 retracement. The spiders are just below the 200-day moving average. The S&P itself is slightly above, but let's just say, we're there, right? I mean, you have to give or take some wiggle room on either side. And I've always felt that we're going to be developing some sort of head and shoulder pattern. That's why when everybody was getting bearish down here, I'm like, yeah, I don't know. I still think we have a lot of work to do. But this rally has just happened, especially the last week, on very, very anemic volume. Nick in our chat room, he's a young trader, but he's really good at statistics. And actually, I hooked him up with another trader that I know here locally. And, I'm trying to hook those two up together because they're just, I love it when young traders are in it. And, anyway, he was saying that the volume was at those lowest levels since 2000. I forget what number he said, 2019 or something, whatever it was. The point I'm going to try to make here is that the last leg of the rally that we've seen in the S&P has been on very low volume. And you were talking about levels, Stelios. We're right up against the 618 retracement. We're right around the 200-day moving average in the spiders, really, which is the S&P ETF. You can see we're right here. I guess we are above the 500 or the 200-day right now. But as you can see, all of this resistance is right where we're at. So I would be really careful about trying to chase the market higher going into Friday. I mean, I hear what you're saying, Stelios, but if you're going long, you trust Putin.
I didn't say go long. I think the path of least resistance. Hey, you there? We can hear you now, Steve.
Okay, so you're going to hear me. Okay.
Yes. Yeah. I was just saying the path of least resistance, I think, unfortunately, is still higher.
Oh,
and
no, don't try to backtrack what you're saying.
There is technical
unfortunately,
resistance.
No, you were really sure yourself just a few minutes ago, Stelios. So I'm just kidding. No, I hear we've been just grinding higher. I mean, we have. I mean, it's a fact, right? We have just been grinding higher in the markets this week. This is what a 10% rally off the lows. I mean, roughly, 8 point something percent rally. I mean, it's pretty significant. It's not a small number that we've rallied off the lows. So it's interesting to see what everybody's perception or take of this market is up at these levels. Kman, you were saying something, and I so rudely interrupted. So what were you?
Just to steal my lines.
I'm sorry.
Just to steal my lines. Have a good weekend.
Okay.
No. The thing is, what I wanted to add is that low volumes we have seen over the past weeks since the beginning of the let's say the war in Ukraine. There hasn't been in years so much repatriation into cash. So the volumes in the markets have diminished, but the people are still doing options, and that's where Anthony was saying as well in the chat on the side, is that through options people have to cover those, and the stocks go up on very little volume. And the other thing what I would like to add to what Stelios is saying, and Dale said it, I think right at the beginning of the webinar, is that the market is very quickly getting used to a kind of situation, and then wherever it's right or wrong, and psychologically it is wrong, but then the money just moves on, and the situation maybe is still extremely bad, but money doesn't care.
Yeah, unfortunately, that's right.
No, money doesn't care. You're right. Hey, by the way, the Nasdaq's at the 50% retracement, and if you guys haven't seen it, yields have been just out of control, right?
Yeah, and Dale was showing Apple, Microsoft, and all those things, and that's money has to go somewhere.
It does.
And as Paul Tudor Jones, I think, said, cash is not a position, so they will be shifting their portfolios from one into the other and trying to make money. So unfortunately at times, but that's how the market works, right?
So I was talking to a friend yesterday. I had to drive across town, and one of my good best friends, he's like, and he trades quite actively. We were talking on the phone as I was driving. He's like, man, this market's just crazy. He's like, it doesn't make any sense, blah, blah, blah. I'm like, well, and right now, and I was telling him exactly that, Kman. I was just saying it's rotation. I mean, money has to have a place to go. And unless you start to see the dollar really firm up, or maybe you see gold, or maybe it's even crypto. I don't know what the get me out of everything and into cash trade is right at this moment in time. I'm assuming it's going to be dollars, sell everything, give me all my chips, I'm cashing in, right? That until you see that move, you're right. It's just rotation. I mean, you got money still coming out of European equities, whether it's, here out of the UK or out of the German DAX. I mean, you can see that's really underperforming. You got money coming out of here going into different places. I will point out though,
markets, I mean, it's completely illogical that emerging market currencies went up with a war situation.
Yeah, totally right.
If you talk about a trader who has been like Dale and myself 500 years in the market, it's completely illogical. The EM currency should go lower on risk off, but and this is the
you can see it like in. I haven't looked at that in a while, but you can see in EM that emerging market fund is just rallied over the last. We sold off because that was your initial, gut instinct as a trader, and most portfolio managers are just going to say, crap, let's dump the emerging markets. And then all of a sudden you get this whoop, whoop, reversal. And they're like, crap, was a bottom just put in? And you're right. You're seeing these emerging market currencies have acted well. Dollar MEX is back at 20.
Yeah.
I mean,
crazy, right?
That's I mean, as a currency trader of how many years have you been on currency trade floors there, Kman?
40.
40. So you, as a young pup FX trader as you are, how weird is that?
Yeah. The initial reaction was completely understandable, but the way they came back, roaring back, is quite amazing. But then we have this is the new market situation. The new norm is that when the shit hits the fan, then the market, since there is so much liquidity, they look for ways to make money and to put their money in. And now we have seen this is the new market. You buy the high yielders when the rest of the yield is still close to zero. Or the Fed starts to hike, but they're still at the quarter to a half. It's close to zero compared to 6.5 in Mexico, for instance. But then you go into into countries who are either far away from the storm or produce stuff that people may be needing and is tough to get. So they benefit from high from supply gluts now. This is the new way of trading, actually, because otherwise, like Aussie, Kiwi would never have been where they are now.
Yeah.
If you trade, that is not trading a slowdown, right? This is a new way of somewhere trading, and we need to adapt to that.
But it's also the old way as well. You know, we were speaking about it yesterday. You know, when we're seeing QT coming along and people getting out of bonds that they've been sitting in because of QE drove the price higher on them, and now they're getting out and they've got to put the money elsewhere. Where do you go? You go for the yield, you go for the returns. And when you can get, like you say, interest rate 6.5% in Mexico, which is a pretty stable country.
Really? Have you been there?
In general,
I live right next door.
It's not Venezuela. It's not Argentina.
That's true.
Sort of
I'm joking.
It's not Turkey,
by the way. I love Mexico.
But that's that's what investors, long-term investors, big investors look for. They don't jump in and out of assets every 5 minutes. They park their money up where they get a return and they can sit on the return. Now, obviously, they've got to deal with inflation, so it's not just a interest rate thing, but that's what money does. It goes looking for the best returns and the best yields it can get.
Sure.
And
hey, I'm going to tell you where money's not going. We got to shift gears, guys, a little bit because we're running out of time before Pippa gets here for Dale. But I just to say where money's not going, it's not going into the yen. So, I mean, look at this move in the yen. It has been ginormous. Now, I got to ask you at this point, and I tried standing in the way, just so you guys know. I tried to sell Canadian and Aussie yens, a little bit of it. And, I took a loss and I said, I can't deal with that because when you have these moves, I've been watching people fade. Let's just say the Aussie yen is a good example. I've been watching people fade since the mid 80s. You take the euro yen. I've been watching people fade this thing since they hit the 618 over here at 130. And the guppy. Been watching people fade that too. And I tried stepping in front of it yesterday. I guess it was a long 24 hours. So I got short a little bit up here at this like 90 whatever, got run over, Canadian yen. I tried stepping in front of it right here on this butterfly completion, because when you have confluences, it's like, okay, these technical levels may end up being more of a speed bump, but I'm doing it. And you go counter trend, doesn't work. You take your loss, you get out and you move along. Well, daily sentiment index is so extreme. It was at 5 overnight, which is beyond extreme. I mean, I've been watching, some of these sentiment indicators for like, years and years. And this is beyond like anything that I've seen. And it's been consistently low for weeks. So what do you guys make of this? I mean, are we done here? I mean, I know, Kman, we talk about it every day and you're like, well, end of fiscal year. You've been talking about that for the last couple of weeks. We still have another week before fiscal year end in Japan. But, I mean, does that mean we go all the way up until the calendar day, or should we be looking at a possible reversal soon?
Not necessarily. We had a few comments, as Ryan said earlier. We had a few comments, and then Suzuki, the finance minister, is the one that we really need to look out for. And he said a little next step. He said now they are watching FX closely. So
yeah, the comments did come out last night, right?
I love this comment. We're watching FX closely. Okay.
Yeah.
As the S&P was watching the FX closely as well.
Yeah, but everyone who trades yen for a long time knows exactly how the steps go with the Japanese MOF. So
yeah, they first say that they're worried, they then say they're worried again, and then they consider doing something.
Okay, we can talk about it another time. But yeah, so there's been a few comments out. They're probably going to put a package in place to alleviate pressure on the importers. So as a result, I know I've said for a long time I'm trading the calendar, but I'm trying to pick out the weak one, which in my opinion is still going to be the euro. So I've started today to sell a little bit, very a little bit, euro yen above 134. And the higher it goes, the more I will add until I'm in a full position. If it needs to be up to 136, 137, but I think that is one that has a fair possibility of correcting once the fiscal year is over, once we are in this last fixing. And that's it.
Okay, fair enough. And one more minute. Anybody else have any comments here? Because I do want to talk a little bit about crypto. Okay. All right. Real quick. You know, a lot of people are getting excited about cryptos here. I was buying Ethereum down here at 2,600. I sold it at 3,000 this week as we came up against triangle resistance. But we've kind of pushed above that, and I think there's obviously a little bit more room to move here, but we're getting close to 38% retracement. Bitcoin also kind of broke out of this triangle, but we failed to get the 38% retracement here. I'm a little concerned that we've seen this huge rally in equities, and we've seen this huge, I say huge rally. Well, I guess it's been pretty big. It's been like an 8% bounce in equities, and we have not seen we've seen cryptos respond, but I would have thought by now you would have had Bitcoin trading up towards 55,000, somewhere up in this neighborhood. Ethereum would have caught a bit, and we've been up around 4,000, or maybe the 200-day moving average at least, with a lot of, I would say, fairly positive news out of the crypto space. Do you guys have any opinions here? Anything on cryptos? I'm actually thinking about shorting them soon. So that would be my point of view, is that they have not responded to risk on, and if we do get risk off, these are going to be the first ones that you take to the woodshed. So do you have any ideas here?
Underperforming, that's for sure, and I agree with you. When we get risk off, I think they're going to be underperforming even more.
Yeah.
The question is, when do you time it? That's it.
Well, yeah, because that's the whole basis of the conversation that I'm having with you guys earlier about the S&Ps being up here around the 618 retracement. We're pushing into really, really key resistance. We completed the double bottom, so I know we're getting into a bunch of resistance. And let's not forget, guys. And this is, I know, and I had this conversation, a couple of days ago. The stock market is not the economy. However, with these commodity prices, us facing inflationary pressures that we haven't seen in I don't know, ever, in my lifetime. Really, the last time inflationary pressures were like they are right now, I was really young. I was a kid, right? So we're dealing with some really, really big pressures that are going to affect consumer spending. It's going to affect consumer confidence, and don't forget, we are not the only. I say I'm speaking as an American. We are not the only consumers of the world. You know who created a big consumer society as of the last 15, 20 years? China. Yeah. So just remember, with these inflationary pressures, it is going to put a lot of pressure on the individual consumer spender globally. And I think that we have to be really careful with risk assets moving forward as a result, because I don't think these pressures are going to come off anytime in the near future. Anyway, hey guys, I'm going to shut up here. Any last minute comments before Dale brings in his esteemed guest?
No, just have a great weekend all, and thanks to Dale as usual for leading the charge and all this every week.
Yes, the coach.
The coach.
The coach. And hey, I want to mention really quick before we go, if you guys haven't tried out ForexAnalytix, make sure you do so. It's $1 for 10 days just to try it out. Download the mobile app. Also, visit the Trader Funding Program if you guys want to learn how to access larger amounts of money with, for the assessment fee is a one-time fee, and it's fairly small based on the money you're accessing. If you want a little bit more information on that, there's a video right at the bottom. You'll see me, a 2-minute video. Check it out. We've had a lot of people actually start taking the assessment, and we've had several that are actually accessing live trading accounts. So it's great. It's a great opportunity if you think you can trade. So check it out. And Dale, thank you so much. Stelios, I heard Steve momentarily. It would sound like he was on a mobile device, but good to have you here. Ryan, Kman, thank you guys for all of your comments. And Dale, have a great interview.
Thank you, Dale. Have a great weekend, everybody.
Is Dale here?
Has he hit the beach already?
Did we lose Dale?
No, I'm here. I'm here.
You were on mute the whole time.
Checking his
I'm
pop
not sure
pages.
we're going to have an interview.
Oh no,
I can't find Pippa.
Oh, you haven't been able to find her. Got it. All right. Well, that would be. Well, let's talk for a little bit. While you're doing that, Dale, let's since I didn't. Am I still showing my screen? I am. Can you guys see my screen?
Yeah.
Okay, good. All right, go ahead and see if you can track her down, Dale. Sometimes that does happen. So what else would I want to talk about today? Let me think about that. We talked about emerging market currencies. We talked about the yen. Oh, let's talk about the euro. So, and I don't know who's still here. Who's still here? Ryan's still here?
I'm here.
I wasn't looking for Steve. Anybody else here?
I have no doubt.
Put your hand down, Steve. Who else is here?
We're all here.
Okay, good. I'm just kidding. Steve, I was just giving you a hard time. Not really. But here we got the euro is pretty, we're stuck. Did you say something, Dale?
No, I didn't.
Okay. So we've got the euro that's stuck between this 111 and 108 area. And based on what's happening in Russia and Ukraine, the one thing that I would have thought by now, like if you would have asked me, and I've said this before, but if you would have asked me, 2 months ago, hey, if Russia is going to invade Ukraine, what do you think is going to happen to the euro? I would have said, we're probably going to parity. That would have been my initial, just blurt out off the cuff, comment. I would be like, yeah, the euro is probably going to come off pretty hard. Based on this whole situation, I thought the euro would be a lot lower, and it's not. It's actually holding up relatively well in light of everything. So does that make the euro a buy here, or and especially you've got everybody pricing in, well, how many rate hikes is the Fed looking for this year? You've got everybody pricing in a more aggressive Fed, a not so aggressive ECB as a result. You've got the euro that traded lower, but it really hasn't traded that much lower. So what are your thoughts with the euro at these levels? Is it a buy here, or do you just you look to sell it on a break below 108? What do you think? I mean, I've been shorting the euro for so long. I started buying it as we got to 108, and most people here know the reasons why. But I still like it down here, and it feels a little weird buying it in light of what's happening. But what do you guys have? Do you guys have any thoughts?
I think we have to look at interest rates again, because myself, I had exactly the same reaction as you, and I still think euro will end up lower. But we have to look at the interest rates. All interest rates have been rising at the same time as the dollar interest rates. Even some central banks have been rising, like the Kiwi and Aussie, perhaps in a week or two. But all the interest rate, all the yields have been going higher. Even the euro yields with Lagarde still not hawkish. But and I think that's what mechanically holds euro around here. That's my opinion.
Let's continue talking about that, because you talk about other central banks. We're looking at the euro dollar, but then, one of my best shorts of the year has been short the euro Aussie, just shorting the hell out of this thing. This thing's just been dropping like a rock. Same with the euro Kiwi, shorting the heck out of this thing too. It's been great, but we haven't seen the euro really drop against the dollar, which is weird, right?
Yeah, but it's you got to, again, how much influence is the yen? Because euro yen is while you think that the dollar is strong, that sends euro dollar down. Well, euro yen rockets into the moon, keeps a bid in the euro side. So it's pretty much the same with cable as well. It's been up and down, but it's not moved anywhere massively compared to, like you say, euro Aussie or euro Kiwi or any of the other Aussies. So it's one of those things where you gotta look around and see who's driving the bus. And at the moment, euro dollar is the just sitting. It's like a bit of flotsam in the sea. It's not going anywhere. It's going wherever the other tides take it. But when it does move, it's going to move. So like you say, you gotta wait for the catalyst. But in the meanwhile, all you can do is trade the levels. If we break up above 10.40.50, that's a potential move higher. If we get down below, what are we now this week? 109.60. We see some downside perhaps. But if you want your moves, you've got to look elsewhere.
Yeah, and Mike said something a little in the comments earlier. He said, shorts are getting frustrated. I would imagine they are. I have no position in the euro. I'm waiting I'm going to be buying it at 108.50, somewhere down there. If we get down there, I know my risk, and as a trader, this is the one thing that we can always control, right? Is we can control our risk. We can't control anything else. Can't control central banks or comments and headlines, but we can't control our risk. So I do think that if we get down to 108.50, if you're playing the maybe the longer term dollar short game, this is going to be your best risk reward for a counter trend move right here, since we've held this since the inception of the euro. So it's like, why won't it hold now based on everything that's happening? It's still holding. So, I'm like, give me another opportunity to buy it down here at 108.50. I'm going to take it. But at the same time, I don't necessarily feel like I want to be shorting up here at 111.20. And I failed to short it when it was up there a week or two ago. And I knew it was such key resistance. I just didn't, I guess it was last week. I failed to short it up here. But I think these two levels are places for opportunities. Steve, did you have an opinion here on the euro?
Not a different opinion than the one I expressed. I think it was 2 days ago. That as long
but not everybody was here 2 days ago.
Yeah, as long as we trade below 111.40, 111.50, roughly there, I don't see the technical argument to be long, and I don't even see the recent consolidation having any characteristics that would make me enthusiastic about owning the euro here.
Okay, and you do live in Europe, so there you go. All right. And so we are definitely mid-range. So Ryan, you say we're looking for we should be looking at different areas for possibilities. Hey, I just want to point out, and this is going back to our earlier conversation. You guys got to be really careful about watching about the stock market at these levels. We're at a 618 retracement. We completed the double bottom. We are, you look where the 200-day moving average, we're slightly above it, but we've been on both sides of it all week this week. And I think we're getting into some really dangerous territory be chasing the market higher. So just be careful. We are Friday. Stelios thinks that we might catch a bid going into Friday where people start, getting squeezed. I actually think the opposite personally, but here we go. That's what makes a market, right? I think you go into a long weekend, you go into a weekend and you still don't know what's up, Putin's sleeve right now. You might get some actually selling and, some profit taking after a significant rally, the last 2 weeks in equities. You might get some people saying, all right, these aren't bad levels to take something off the table. So that's something that, I want to say. Dale, any luck?
Nope.
Okay. All right. Well, hey guys, it's Friday. TGIF. We still have the morning edge in about 35 minutes for the ForexAnalytix subscribers. Dale, you're going to try to reschedule with
Sure.
Pippa, because you bring on her dad, Harold, here on quite a bit. And have you ever had Pippa on?
No. Mm-mm.
Okay, so this will be a first
I've been
time.
working on it for a long time.
Yeah.
He brought her name up, and he brings her name up.
Yeah, and it'll be an awesome guest to have. And the reason, one of the reasons why is she actually announced that that World War III has already started.
Yep.
Right. I mean,
Yep.
that's pretty huge. I mean, she used to, be an advisor for
George W. Bush.
George W. Bush, and some other,
some people in the UK. I was going to ask her if she could talk to Boris about getting a different haircut.
All right. Well,
that was my big, heavy question for the interview.
I would literally give Ryan $100,000 if Ryan would run over to Downing Street and just like clip off a piece of Boris's hair from behind him and send it to me. I'd give you $100,000.
I sure hope he doesn't eat out of a cereal bowl.
Would be enough to cover his legal costs. So
you got more chance of catching Biden in his Zimmer frame.
You know how he does it? He puts a cereal bowl over his head and then cuts around the bowl.
Yeah, he does. My mom used to do that for crying out loud.
Putting basin.
That's when you're a 70s kid. Bowl cuts were totally in. Well, I don't know if they were in or just it's a way for my parents.
They were cheap. That's what they were.
Anyway, I want to thank the team. I mean, I learned a lot from you guys, and with the addition of Ryan and Kman, it's really magnified. The wisdom on the team, so I mean, Stell and Steve and you, Blake, always learn from you, but I mean, great team. If I was just starting out and I would have found a place like this, I would have saved myself a lot of heartache. So save yourself some heartache, especially if you're new. Because you can't learn experience. It only happens with time. But if you surround yourself with people that are better than you, that are willing to give you a hand and share what they've learned, it's priceless. So, I recommend you join today and also sign up for the great events that we're having. And if you want to learn how to be a disciplined trader, rather than risking your own capital in the market, take an assessment. And it'll be, even if it doesn't work out for you, you'll learn from the assessment. And
so I was talking to our broker partners about the assessment yesterday. We were just having a discussion, and we were talking about the mechanics of it. And he's like, well, very much we are aligned with developing proper trading skills because of. Because I was talking about I'm like, a couple of these traders, have come in, they just try to, take on huge positions and swing for the fences. And he goes, he's like, yeah, we don't want them. This is to foster good trading behavior. proper trading behavior in the market. So, that's what the assessment's all about is really.
I'm just having a conversation on that very thing on Twitter with someone. I put a tweet out earlier about the program, and a couple of replies, and one of the guys said that the time limit, where there's obviously no time limit, is definitely a game changer. Because most traders fall under pressure. And, I'm talking to these guys on Twitter. We talk about it all the time. We respond to you guys if you contact us about this program. And it is for channeling discipline. You can't come in here and think, right, I've got a 50 grand account, I'm going to chuck it all about. You've got to be disciplined. You've got to be more disciplined, I think, doing this than if you had your own money in an account, because that's how you make a success of it. And if you can learn that, because that's all the rest of us do. Myself, Blake, Kman, Stelios. Doesn't matter what our views on the markets are. How we enact trades, how we trade, is with discipline. We know what we're doing when we set out a trade. We're not caught like a deer in the headlights. We can take spankings.
And I understand just as well, if not 100 times more than the average trader, what it's like to be under pressure, time wise. To try to make money, and you make bad decisions. I mean, every time, when you're trading for somebody, whether it's a firm or it's an individual or whoever it is, or family office, when you're at the end of the quarter and you're forced to, make some decisions to make your quarter, to get your payout, or, to make money because you need it for whatever reason. It's that pressure is unneeded, and in the trader funding program, we don't have it. We don't put that undue pressure on you. You have all the time in the world. You just take your time.
Look at your example, Blake. You've said you got hit on trying to buy yen pairs, but you haven't crippled your account. You haven't done yourself any damage. You had a couple of goes at it. It didn't work. You lost a bit of money, but you move on. You survived. You haven't done your arse on it, and that's the important thing. It's the discipline. You're fighting a trend, so you knew perfectly well where your risk lay, and you didn't put the house on it. You traded sensibly. You took your loss, and you moved on.
Yeah, exactly.
And you come back for the next trader. That's what trading's all about.
That's right. And so, guys, we're not going to stretch this on any further. Check out the trader funding program, and just remember, you not only do you have an unlimited amount of time, but you also get ForexAnalytix, the community, and you got all the ideas, and you're in the chat rooms. You're in this chat room with all of these, oh, hey, what positions are people taking around here? Oh, people are selling this, buying that. Oh, here's the chat room with, different ideas with, what everybody's doing. You got the macro chat room, the, Flownomics room, the news and research room. And I mean, everybody's talking about the markets. I mean, why not have ideas while you're doing this too at the same time? So anyway, I'm sorry I interrupted somebody that was going to say something.
No,
Dale, now that
Steve.
It's just between us and a few hundred people. When do you have an opening for an interview?
Let's see. Well, I keep some Fridays open, but let's see, we're almost through March here. I have one in February 23.
Wow.
I'm
kind of booked up until then.
I know. I have one April Fool's Day. That'd be a good day. NFP, I think. Friday, the 1st of April. Friday.
That's actually next week.
Okay. Yeah.
I'll tell you who I want to bring. I want to bring Lars Rasmussen. If you Google him, he's the guy that actually made Google Maps. The reason I want to bring him is because after recently finishing his career in, Google, Facebook, and all these companies as a, lead developer, etc., he has been a VC and angel investor in tech companies, right? In tech startups, basically. So he has a very good insight of what is currently happening with these markets. And without needing to, spoil too much, I can tell you that, I know him now in person and we hang out because our kids are friends. He's Danish, but he now lives in Greece, actually. So he was telling me that in essence, capital is drying out for all these companies. So there is a lot to be learned by talking to him about, the markets and the underlying climate in what has been the rocket ships, so far. So I think it's going to be interesting to have him.
Okay.
So let me
open.
ask you this, Steve: is he a crypto bull or bear?
He's a guy, he's going to tell you, but he's a guy that had the ability to invest in crypto companies since the very, very beginning, because of course he was fully aware of them. He decided, and it can be an interesting part of the interview, he decided not to invest in crypto because he was totally uncertain that any of them would, so early on created, would survive. He did invest, though, in a couple of companies that created hardware to mine cryptos. And his words, because he's a very upright guy, he's a very, very nice, down-to-ground person, although he has been, one of the most successful people in his industry, and he's made a lot of money doing that, right? Is that he actually lost a lot of money in that investment. So
interesting. All right. Well, let's not take away too much from what he would tell us.
Trust me, he still has a lot to say. I mean, he's a very interesting guy that's been in this industry for decades. He's seen it flourish from inside out, right?
Steve,
as I said before, I'm not kidding. If you Google him, Lars Rasmussen, you'll see him immediately in Google. He's the guy that co-founded Google Maps and a lot more stuff. So I think it's going to be very interesting having him. So it's next Friday. I can tell him to join.
Yes.
Okay.
All right. So that's awesome. And guys, just so you know, I am still going to schedule something with Dr. Gladys McGarry, the mother of holistic medicine. She's 101 years old. Although her son had to go, he lives with her right now. But he's actually from, he's a retired minister out in Pennsylvania. He had to go back for like his wife's surgery or something. So he has to be there to help her with the technology stuff, getting connected, even though she just lives down the street. But we're going to be doing it via Zoom. So you get to, meet with her. That's going to happen. It's just now we have to push it back a few weeks, like maybe about a month. And you guys can meet the mother of holistic medicine. We'll do that. And she's 101 years old. And she's as sharp as the day that I met her when she was in her 70s. So it's an amazing woman. So that'll be coming up over the next few weeks too. Just want to let you know that hasn't changed. Just it's more of a scheduling thing. So anyway, Dale, have a great weekend. Thanks for hosting all the time, being with us.
All right, buddy.
All right.
The host was the most, and that the most is the team. The most is the team. So have a great weekend, everybody. Recharge your battery, make your plans for the market. I think we'll have every week's interesting, but we're getting some real nice volatility. And again, become part of the community. Don't hang out there by yourself in Mind Trip. So have a great weekend, everyone. I'll see you later. Team, have a great weekend.
Thank you very much, Dale. Have a great weekend, everybody.
Thanks, everyone.
Adios.